Hey everyone, Calvin here. Today I'd like to talk about 5 things that I learned from Rich Dad and Poor Dad by Robert Kiyosaki, who is an American businessman, author, and motivational speaker. I'm sure many of you have heard about him and probably even have read his classic book of Rich Dad and Poor Dad. But you may not have necessarily used anything you learned from the book, or probably even forgot the concepts that he mentioned in the book. So you probably want to watch this video and remind yourself of what's in the book. And for those who haven't read the book, this is a good start and summary of the book for you to decide whether you want to read the book. Let me be clear, there are many things that this author said and did that many people don't like. In this book, he called MBAs, those who graduate from business school with master's degree, sophisticated bean counters. Even though he got an MBA from University of Hawaii, he also suggested many unethical things like multi-level marketing, which is even illegal in some places on earth. So I don't really 100% agree with what he said and what he did and what he promotes. But there are many things in the book that really worth thinking twice and studying. This is my second time reading this book, and 5 years ago when I was first time reading this book, I hated him so much. That probably because I was in academia and because he criticized education. But it seems like he did publicize many points of view that business people share with each other privately or even secretly, and probably are some of the factors that made them wealthy. Now, when I was reading this book for a second time, a lot of things makes more sense. Most likely because I'm working like most people. Without further ado, let's get started. There are 5 things that I learned from this book by far. Number 1 is understanding the difference between asset and liability. His definitions of asset and liabilities are totally different from those in accounting or finance. In finance, asset is something valuable that you own. Liabilities is how much you owe to someone else. And the difference between the two is called equity. In this book, he defined it asset as something that brings you money into your pocket, whereas liability, something that takes your money away from your pocket. So these concepts and definitions are totally different from what's taught in your accounting classes. When I was reading this book for the first time, I was so confused that I thought he was an idiot who was trying to fool people around. I didn't know what he means by asset and liability. I didn't know what he means by saying that most people buy liabilities that they think are assets. And I didn't know why a house that you own is a liability instead of an asset. Now I think I understand them very well. He's saying that anything that constantly brings you dollars is asset. For example, if you buy a dividend stock with 4% yield, like TD stocks, spending $50,000, you own the stocks, which if you choose right, will increase in price. On top of that, you'll receive $2,000 dividends each year, which is thank you money and free. That's one example of asset. Whether you work or not, you'll receive these dividends, unless the company stops paying dividends or goes bankrupt. So in a bankruptcy case, you probably have bought a wrong company. And on the other hand, liability is something that takes away your wealth a little by little. I'm going to use money, dollar, and wealth interchangeably, because many people like the word wealth more than dollar and money, which often sounds too blunt and too straightforward. Sometimes I have to clarify these concepts with nicer words so that you still like me. Anyway, the concept of liability in this book is that it is something that makes you less and less wealthy over time. For example, if you bought a house and got a $300,000 mortgage with 3% interest rate from your bank for 30 years, on top of the $300,000 principal, you'll have to pay about $154,000 interest in total over the 30-year period of time. That $154,000 is the money that flow out of your bank account into your bank's bank account over the 30-year period of time, a little bit at a time. In the end, you are paying about 50% more than what you're supposed to pay with cash for the house. That's a liability for you, but it's an asset for the bank who gave you the loan. Number 2 is that Robert Kiyosaki said that destroy the like button below and smash the subscribe button for YouTube algorithm so that you promote my YouTube video by telling YouTube that this video worth more appearance. Thank you very much. Seriously, the second one is that to create enough passive income to free yourself from your work. Obviously, he is not the first person who put forward this concept, but he explained and emphasized the concept so well that made me thinking it is totally achievable. To be honest, until this year, I never tried to create a passive income so that I can work whenever I want, or I don't even have to work. Most people have heard about this concept before. I heard about this concept long before this, but I never took it seriously because I had other things to work on, like doing experiments, publishing papers. And now I'm working for a company like most people and thinking that this concept makes a lot more sense now. For me, it makes a lot more sense than it used to, because essentially this is what entrepreneurs do. They spend a few months after a few years building a business. Once it's working, they hire managers to run it and put the business on autopilot, which constantly generates money for them even after they stop working. Then they retire, travel, or move on to create their next business. That's exactly what entrepreneurs and business people do. This way, they're not constrained to a 9-to-5 job and financially free. Don't get me wrong, a lot of people just enjoy going to work every day. And they love their job and love what they do every day. Perhaps it gives them a sense of accomplishment and helps them maintain a routine that they want to keep. The third thing I really learned from this book is that financial education, which we don't teach in school, is very important if you want to live a life free from financial burdens and troubles. Some people call it a skill to direct and manage money and wealth. You probably have a lot of people who once were celebrities ended up car washing and even ended up on the street. That's because they don't know how to use accountants to file their tax in their favor and how to use legal system to protect themselves from potential lawsuits. Then they ended up losing their money to others. This is something I'm still learning and trying to be good at. Before I'm wealthy enough to hire accountants and lawyers, I'd like to understand them and handle them myself. With that, I'll make much better financial decisions, thereby career decisions. What's truly surprising is that schools do not teach personal finance and don't even talk about the fact that they don't teach personal finance. Most people learn personal finance from their families, like Robert Kiyosaki. He learned from his rich dad, a friend's father. I know some people would say that Mike's dad is fictional. In either way, most people learn about personal finance from their parents and then from their friends. It's like epigenetics that we learn in biology. As a result, those kids from wealthy families who take personal finance as a very important subject to teach their kids have very good understanding of and practice about personal finance. Of course, there are some exceptions in the wealthy families, just like there are some exceptions in the financially handicapped families who teach their kids little about personal finance except that telling them save as much as possible. In their mind, saving is the only way to get wealthy. And that's not how people become wealthy. And personal finance is a much greater topic than just saving your incomes. It involves accounting, law, business, technology, etc. I know a lot of people would say that it's a conspiracy theory that the school do not teach personal finance on purpose in order to generate more excellent employees for the society. Well, I think there's another more practical reason that can explain why schools don't teach personal finance. That's probably because teachers who are good at personal finance quickly realize that teaching at schools is not the best way to achieve their personal finance goals. Thereby, they left the school to pursue their personal financial dreams. Fourth is understand and learn how to use tax system in your favor legally. Recently, I created a video on how to maximize your tax deduction by claiming your 2020 COVID-19 work from home expenses. The reason I created that video is because most people I have spoken to about the subject didn't know how to maximize their tax deduction by claiming those expenses. That's just one example of what people aren't really aware of. People usually don't spend their time to try to understand how the tax system works. Wealthy people, especially those who are financially very strong, really understand how the tax system works and use it in their favor. Of course, legally, whether it's personal income tax or corporate tax. By any means, I'm no expert in this subject yet, but I have already known the importance of this subject and will continue to learn and study. For my US audience who are wondering about tax, you can search Graham Stephan Tax on YouTube. You'll learn a lot from his video about how to maximize your personal income tax deduction. For my Canadian audience, I'll make more videos about tax. And if you're interested, please don't forget to subscribe to my channel. Wealth is like Thor's hammer, which only worthy ones can rule. In this case, it's those who have strong financial education and knowledge, which is the foundation of wealth itself. Without the knowledge, one cannot rule wealth. The fifth thing I learned from his book is that financially troubled people often avoid taking steps proactively to solve their financial problems, and even avoid talking about money. They often say, I'm not interested in money. Whereas wealthy people often take proactive approach to further grow their wealth and talk about it actively, and they enjoy doing it. And most of the things that they do are to grow their wealth. I understand that the fear that financially troubled people experience would make them avoid talking about the subject, but they don't solve the problem. Each time when I read this book, I often ask myself, how can on earth people don't talk about this subject? This really blew me away. Now I think it makes a lot of sense because it's not their favorite topic to talk about. They have other distractions to engage. These are the 5 things that I have learned from this book by far. Obviously, these won't be the only things that I'll learn from this book. As I read many more times, I'll learn more about wealth and how to achieve it and how to set myself free financially. It's thinking that really defines who you are, and how you think can be learned. If you think like wealthy people and manage your wealth like them, you'll potentially grow like them. But if you think like those who are financially troubled, then you probably will become one of them. That's why Robert Kiyosaki says, poor starts here, so does wealth. Alright, thanks for watching, and I hope this helped you. Don't forget to discharge the like button below and smash the subscribe button if you haven't for YouTube algorithm. As always, see you next time.